what better a time to be covering this material than the ashes of a bear market?
Today we'll be covering something that's kind of been trod already. It's the FTX debacle. Mike, do you want to kind of lay down some groundwork?
Yeah, so I think you took some pause on this because it's still a very much developing story, but the FTX debacle is I would, in my opinion, still unraveling, and it's a perfect amalgamation of what we of Web3, I guess, to a certain point, because it involves crypto and it involves fraud and it involves just everything juicy that is.
Wait, are you saying that Web3 or fraud is endemic to Web3?
A lot of people would like to think so, but no. What I'm saying is, FTX is one of the, it's dare I say the modern times Bernie Madoff, maybe. So far. What I meant to say is, FTX is something that is, for the most part, I believe that I think the best way to explain it is, everyone thinks that it's just the next Madoff, but in reality, what it really is it's a little bit more intricate, considering the fact that there's a whole new space that was being used and abused, which is that of, I guess, the crypto scene, and using a central exchange for that matter, and that's why we have our new guest here today, is because Oleg is very much involved in the crypto scene, and he is going to be able to, and he's been covering it and following it very closely, and he's going to be able to break down something that is majorly complex a little bit further for two dumb wits like us.
All right, so before we get into it, and yeah, thankfully we have an expert on in a few minutes, is this, for all the uninitiated, and I'm including myself in that, is this the first nail in a large coffin with lots of nails in it, or is this like the first zit on the face of a pubescing industry, right? In other words, is this like just one of the stones that Web3 has to trip on in order to grow and be a stronger force?
Correct. I would say that this is probably, yeah, I think this is definitely the first zit.
The first zit on the face.
The first zit, or like the first
first heartbreak.
The first erection. You're like, whoa, what is this?
Whoa. I need regulation.
So you're sitting here and you're like, this is a funny feeling. What's going on? That's I think that's what FTX was, and who knows? There's a lot of hearsay, and the reason I always say that the story is developing is because there seems to be a lot going on behind the scenes. There seems to be a lot of people that are being shaken down, and we really don't know what the magnitude of this is, because a lot of people will say, oh, you're being conspiratorial, or this and that, and this is conspiracy theory. It's like there's no conspiracy theory here. There's a lot of
it's very public, right? And we're seeing different people not just go down, but we're seeing different people sing, right? A lot of stool pigeoning, right? And I saw yesterday that Tom Brady, Bunchin, and like the owner of the Patriots is getting like, I mean, they're losing upwards of like $2 billion in US dollars, right?
Yeah, I guess supposedly Tom Brady just got wiped out, which is kind of nuts. And I'm assuming so did his wife, ex-wife, whatever. But yeah, I mean, it's one of these things that is, it's, I mean, it's crazy, because like I feel like whenever it is that we do get into these large financial events that are of this magnitude, you're talking about this isn't just one this isn't just one MIT grad, like that just happened to be able to defraud however many investors, seemed to have been involved. Like, there seems to be a lot of, a lot of shroud and mystery in this because of the scale and because of the deregulated nature of the space. So there's a lot to be. There's just so much to be unpacked and yet to be unpacked. And, and that's what we're here to do. We're here to start it off and see, and at least curate it to a palatable degree for anyone who, is willing to listen and who is uninformed enough to listen to this scratching of the surface that we're about to go through.
So let's get a bit of a glossary down before Oleg gets in. FTT and FTX. FTT is the token and FTX is the exchange. Is that roughly accurate?
Correct. So FTT. So the FTX exchange, and this is for viewers and even me. I mean, this is kind of it's weird to think about, but FTX is built on the Ethereum network. So a lot of different cryptocurrencies or crypto projects, or I guess it's hard to think about, but Ethereum is the blockchain that a lot of these different projects are built on. And so when you have that, there's the native token that works in that blockchain, which is I think it's called ECR20, and that's Ether. That's what it would be called, and it's a cryptocurrency by definition. And then if you were to put FTX on the Ethereum network, what you end up having is a project built on the Ethereum network, which is an exchange, and that exchange is what you would call FTX. And then these projects all have tokens that are essentially, I think in this classification is called a utility token. I'm not positive, it might be wrong, but these are tokens that are used within those projects to accomplish a certain goal. And so in this case, FTT was used in the FTX ecosystem for for different purposes, for providing liquidity for this project, which happened to be an exchange. And people would say, oh, well, how does that even gain value, and how is that, how you'd even define value in that kind of space. And you define value really by just understanding that it is used for a specific purpose. And it's kind of arbitrary, like esoteric, to understand like how something like that has value. But when you understand that like FTT was used to as collateral or margin, or all these different things that typically exchanges need to be using even today in our own world, then you start to understand like, oh, okay, like it does have a use, because in this specific ecosystem, this specific exchange in FTX, FTT was the dare I say currency, even though you're not supposed to be calling it currency. But the FTT token was, it was what was abused and used as, or one part of what was being used and abused as collateral to take out, hard money and, actual like bank loans and other stuff like that, and manipulate, the value thereof. I know I'm going on a rant, but that's that's the gist.
Right? All right, let's bring in a professional here. We got Oleg Giberstein. Yeah. Oleg, hey, thank you so much
for being with us. Yes, hey. I hear you. Great. Hey. Good to see you.
Nice to see you guys.
First of all, thank you so much for lending your time, seeing as you're the father of a newborn. How's that going?
Yeah, not much sleep, but it's getting better. He's I've been reading him about crypto and blockchain, so he sleeps better at night.
Did you get the book? There's a children's book that's it's called Blockchain for Babies. Have you seen it?
Yeah, I've seen it. Someone got it for us actually, but I don't know. I wasn't the biggest fan.
Wait, this is real?
Yeah,
it's real.
Believe it
I saw it at Brian's house. Yeah.
Of course, it's at Brian's house. Oh my God.
Hopefully we'll get Brian on in one of the future podcasts. Oleg, we were just giving kind of a summary. We were covering the Tom Brady thing, of course, that just came out yesterday. That Tom Brady and Bunchen got kind of wrapped up in this and got taken for a ride. And we're doing a little bit of a glossary, right? Like FTT, the token, versus FTX, the exchange. We're going to be saying SBF a lot, which is Sam Bankman-Fried. And at the time of this recording, a lot of this has kind of already shaken out. So I just wanted to lay down a little bit of we wanted to lay down some groundwork before you kind of come in and correct our errors and really give us kind of a fine-toothed elaboration.
Yeah, cool. Sounds good. I mean, the joke with Tom Brady is he's going to be playing until his 50s now to make it all back. Poor guy.
Unless he has lifestyle change.
Yeah, for New England, that would be amazing. See him kind of on like a walker, just like, oh.
He could play for 2 years and live anywhere in wherever he wants to live, truthfully.
Unless he decides to do more investing.
Yeah.
I mean, okay, so as part of our thing here, where we kind of wanted to say, like, what is FTX, Oleg, and like just for the uninitiated, what is FTX and how did it get started?
Sure. So FTX was now, I guess, an exchange, crypto exchange, primarily for derivatives and futures. So kind of more advanced trading instruments. Started, I think it was like 2017, 2018 that things really kicked off for them. It started off, I mean, obviously we can go back really a lot, but it was started by a bunch of ex-Jane Street traders. So Sam Bankman-Fried, Caroline Ellison, Sam Trabucco, who basically met, they were all pretty young, mid-20s guys and girls, were reasonably junior traders. They started Alameda Research, or Sam Bankman-Fried, SBF started Alameda as a trading venue, as a hedge fund, or whatever you want to call it. He saw a market opportunity to do an arbitrage trade for Bitcoin prices between US and some of the Asian markets, so primarily Japan, and used that arbitrage trade to make some initial capital, which then was used. They saw the opportunity. If you start an exchange, that's where the real money sits. And that's how FTX was born. They quickly became really big for a number of reasons. One, I mean, the platform itself was really good. These guys, so you can say a lot of bad things now about them, which is easy to do today. Like over the years, everyone was incredibly impressed by these guys' execution. Like they worked hardcore. Like these guys did not sleep. I remember it was much easier to find all those like really impressed pieces about, Sam and like his team. There would be some user complaining on Saturday on Twitter. By Monday, the tech team had fixed the issues, an execution on an unheard of level. And obviously they had a lot of really good products. Like what people forget is that in 2017, even the good exchanges in crypto were pretty rubbish. Like they were terrible. Bad UX, few products, just they didn't feel clean, they didn't feel professional, and they didn't feel safe. And FTX just kind of brought this, Silicon Valley product quality to the market. And as I said, so a lot of products, a lot of leverage products, like tokenized stocks, a different way to handle margins. The exchange was fast, everyone loved it. So it just started to attract a lot of volumes and a lot of mind share quite quickly.
Yeah, that's really great. And then 6 months after it got founded, Binance bought 20%. How did things change for SBF, for the whole team, for the organization itself? Is that something was that a shift?
So, I mean, it gave them a lot of like credibility and a lot of also visibility, because obviously Binance was like the biggest player in the market, still is the biggest player in the market. It was a huge stamp of approval and gave them a lot of capital to deploy. So that really allowed them to scale the product, scale the marketing. And I think marketing became the thing which they were also very good at, right? I mean, we're all familiar with like the Super Bowl ads and like, the Miami Heat's arena renamed FTX Arena and so on. So they would get in money, use that money to drive more traffic and gain more mind share. But also they were really good in fundraising. So they got on board funds like Sequoia, Jump Trading, Temasek, the Singapore government fund, and so on and so on. So basically like big name, very credible investors who were impressed, by the vision, by the execution speed. And obviously, as we know, like the market loves like a good story of like a, young genius kid, which was SBF and his crew. And obviously SBF went on this like PR campaigns. Like he was on Fortune magazine. Everyone was speculating if he'll become like the world's first trillionaire and so on and so on. So this kind of like like legend of them, the myth behind FTX was growing and becoming more and more like scary and impressive. So suddenly you had this like powerhouse out there. And in a way, you could argue that without that initial Binance investment, maybe things would have taken much longer for them to kick off.
Yeah, that's a good point.
I feel like it's probably also notable to say that FTX was, you know, a U.S. exchange too. You know, I'm not, you know, hating on anything China or anything like that, but I feel like there was definitely a lot of people that were like reluctant to use anything that came out of China for exchange back in like the crypto Wild West. And then when FTX came out, it was like, oh, okay, no, great, no, this is reputable. And it's like, yeah, and it's you know, it's one of those things too. It's just like, you know, it was like a stateside product and it was a stateside exchange. And I also think that is kind of what lubed up, you know, or warmed up, I guess, the U.S. market. I mean, not to say that the U.S. market wasn't already, you know, warmed up. There is, you know, crypto trading everywhere, but that I remember a lot of people saying that. They're like, oh yeah, like, you know, it's regulated.
Yeah, that was the impression, right? If it's a US product, it's gonna be regulated.
Yeah,
but in a
exactly.
way also, you know, it was the Coinbase for degenerates, basically, because Coinbase, you know, Coinbase was very easily accessible for US users, credible, but you just didn't have all those crazy products. You didn't have, you know, the various margin and derivative products, and it was so easy. Like technically speaking, you're not allowed as a US customer to access a lot of those products. But I remember also you are not allowed to access them as the UK, but there would be like this checkbox and it would say, I confirm that I am an accredited investor and I'm allowed to use this. And you would just click yes, and then it would let you trade, you know, like done. Yeah.
Yeah.
Oh man, so what was it about FTX that made it popular and made it grow so quickly? I mean, other than, I guess, was it just the Binance buy-in or Sam Bankman-Fried's ability to whip up?
Yeah, so I mean, as I was saying, I mean, the product itself was genuinely good, right? Like it was really, really good.
Yeah, the user interface was awesome.
User interface was awesome. The number of products, like, I mean, at the end of the day, crypto trading is a game for a lot of people. It's really a game, and it's a casino. And FTX was the best credible version of it out there. So they really knew how to appeal to traders who wanted to trade in size, who wanted to short, long, trade different types of, you know, leverage tokens. So basically tokens in which kind of leverage is built in. So like some 3x BTC. So you buy the token and the BTC goes up, you know, by $1, the token goes up by $3. And obviously if it goes down, the equivalent on the downside. I think they allowed up to 105x leverage or something like that, which was funny because BitMEX, that was like the big derivatives exchange at the time, they allowed 100x, and these guys were just a bit above that, right?
Oh my God.
What a lot of people forget, so BitMEX was really like the big player in the derivatives world. But BitMEX was hit hard by US enforcement. So they brought charges against the founders of BitMEX. And basically BitMEX really lost a lot of their initial customer base and kind of their traction in the space. And just as the time when FTX was emerging and taking that over. So kind of, and I mean, BitMEX was like one of those exchanges really from like the real Wild West of crypto, you know, not like the last 5 years. Wild West. So the interface there was even more complex, even more kind of like not modern. And it was something where like the hardcore crypto traders felt good in, but not necessarily like the, you know, someone who might buy options on Robinhood would feel right at home on FTX.
Mm-hmm. Okay. So Oleg, were just talking about this right before you came on. My brother asked me about this, and I was using this as a warm up. Basically, you know, he was asking me like, well, you know, what's the murder weapon? And so we started talking about the FTT token, and I was giving probably a butchered explanation as what the FTT token was, how FTX is actually built on Ethereum, and how FTT is actually the token that was used in FTX, or utility token that was used in FTX. And so that was what I was wanted to lead you up in was, what are tokens and how are they used in the blockchain space?
Oh. Okay, there's a lot of questions in one. Let's start with FTT and FTX. So in a way, I wouldn't say FTX was built on Ethereum because they were a centralized exchange, right? So they weren't really running on blockchain as such at all. They launched FTT as a token to basically make money, right? That was one of those 2017, 2018 moments with ICOs, etc. You could do a fundraising based on a token, and you get extra money in. And the plan is at some point you give it some utility. For an exchange, that was easy enough because you could say, hey, if you hold the exchange token, then your trading fees will be lower and you pay them in the exchange token. And then they would do token burns, and it was semi a marketing gig, but semi also a way for them to just get initial capital into the door. Later on, as we'll talk about it, I'm sure it became more sinister in the sense that it became the main collateral that FTX would start to borrow against, which then ultimately led to its downfall. So let's take a step back. What are tokens? What are coins? So in the blockchain world, you distinguish between the native token of a layer one blockchain. So like Ethereum, like Bitcoin, like Atom on Cosmos, like Dot on Polkadot, and so on. And you distinguish between tokens which are launched by projects that operate on a certain blockchain. Now, the native L1 token is basically the main, let's say, economic security on a level one blockchain. So let's say on Bitcoin, the miners get rewarded for confirming transactions in Bitcoin. And also they get paid for including transactions in the block in Bitcoin. So kind of the what's known as the gas fee. Same in Ethereum. It's almost so it's funny, it's called gas, but actually it's payable in Ethereum, right? Because you can think of it almost like you're shoveling, gas into the engine to keep the machine running. Now, tokens are what a project can issue on the Ethereum blockchain. There are a lot of different types of them. So most tokens are fungible, but obviously, as we all know, there are also non-fungible tokens. What is the difference? So let's say you have 10,000 or you have the 21 million Bitcoin. Each Bitcoin is the same as any other, whereas they are fungible between each other. Non-fungible means each token is unique. And there are also different other token standards which are less widely known. And it's kind of like you can think of a token as like a building block in this blockchain world. I liked a comparison that helped me really kind of understand it, which was to us now, we grew up in the time of the internet. So we understand, for us, it makes sense what is a website. But in the 1980s, when the internet was coming up, there wasn't really such a thing as a website. And when websites really started to emerge, like let's say in the early 90s, people would just a newspaper would just put a picture of the newspaper on a website. So it was this awkward, weird thing. But really what the website was a building block that allowed people on the internet to basically put up information in a certain way, and that gradually became more and more native. Now, I think there was Chris Dixon, I think he said A16Z, who said that. So tokens are building blocks of blockchains, which basically is enabling a financial internet. And people can do all sorts of things with it. Like you build game theoretical incentives into it. You build, you tie communities together. You incentivize certain actors within a system to do something. You use them for economic security. But also there will be use cases for tokens in, 10, 20, 30 years time we can't even think of today. The same way how in the 80s, someone wouldn't have been able to think of what websites would be used for, 30 years down the line. So you can think of a token really as a building block of this blockchain magic internet money world.
Yeah, right. One conversation that my brother and I were having recently was what the possible, we're getting a little off course here, what the future of like what can we tokenize in the future, and how can these be more real, more tactile, not like actually 3D printing a Bitcoin, because that'd be dumb, but like the next, like the NFT thing for the art market was enormous. Like, can the next thing be like biomedical? Can the next thing be I don't know, like bananas for 37? I don't know, like how can this be more material, more applicable to our material lives, I guess, as opposed to speculation.
So I would start with by saying I don't think we are yet at a point where it makes much sense to use this too much for the real world. Like, I think there's enough happening in the digital world and this technology is particularly useful right now for the digital world. And we can start talking about how it can make sense to tokenize certain financial assets. Like people talk about, like stocks and security tokens and tokenized stocks. Now, it's so much more convenient to trade on blockchain. It's so much faster. It's so easy to connect, different systems to each other. Like, imagine I'm in Nigeria today and I want to buy Tesla stocks. Like, what do I do? I mean, the number of steps involved, like I have to go to a broker in Nigeria who is able to offer, who has a connection with an exchange that in return can, access a US stock market to buy Tesla stocks. Whereas if something runs on a blockchain, like there's no geographical limitation. You just buy it, you just do it. And already this is like a real world use case because you tokenize something that's from the real world.
Yeah. Okay, yeah, I guess that's what's ahead of us, right? And also what we're trying to do here is like define things so that we can anticipate the future. But yeah, it's a good point about, it's maybe a little too early for this to leave the digital space. But so getting back into the FTX quagmire, what exactly was so nefarious or unethical about the way that SBF or Sam Bankman-Fried was using his own token, the FTT?
Mm-hmm. So there was their own token, and then there was also what they were doing around the Solana ecosystem, which we can talk about in a second as well. So with their own token, they started to use it as collateral when leveraging up. And what's really fascinating about these guys, like their risk appetite was beyond anything a normal person has ever seen. Like
bull.
Exactly.
They only go up.
Yeah. Yeah, exactly. The magic internet money, it's programmed to go up, right? What could possibly go wrong? And this is the thing also. These are like the summer children of crypto who joined at the back end of the previous bubble, and things really took off for them in the bear market. So they only really knew the way up, and they probably left their trading jobs when they were junior enough to do trades, but not senior enough to actually do the risk analysis. So they never, it's some of their comments and even blog posts you read, it's mind-blowing how obviously smart they were, but at the same time, how much they overestimated how smart they were. And it's very easy. You come from an Ivy League school, you work in like a top firm, you start crypto, suddenly you're like a crypto business, suddenly you're a billionaire. Why would you think about, black swans and risk and the fact that people have been trading assets for hundreds of years, and there's it's easy to make money in a bull market, especially if you are incredibly aggressive and have access to a lot of capital. Now, how did they have a lot of access to a lot of capital? Among other things, they were rolling their own crypto with FTT. So imagine you play this double game where you go to a lender, let's say OTC desk like Genesis, who also obviously are now in big trouble for all sorts of other reasons, or Voyager or one of the others, and you say, hey, we just raised equity capital at a 32 billion valuation from Sequoia. We want to borrow $500 million. Here's our exchange token as collateral. Now the trading desk thinks, oh, these guys can easily raise money in equity markets. Obviously, these guys, it's FTX, they're printing money, right? So it's the safest collateral out there. We take it, we lend to them, BTC or whatever, or you like a stable coin. And then obviously they take that stable coin And well, here's what they do. So up to until the end of 2020, they were Alameda, their fund was basically running so-called delta neutral strategies. So they would do arbitrage trades, for example. They wouldn't take a position on the market. So they wouldn't be like, hey, we think Bitcoin will go up, so we buy Bitcoin. They would run trading strategies, market making, and so on, where you get paid, and there is a tiny risk in between, but there isn't a risk in terms of the market goes up or goes down. The idea is you get paid in any case. Now, as more and more people were starting to do that, it seems like their edge was disappearing, so they were stopping to make money on that. So what do? They start to take on even more leverage, use that money to do venture capital bets and invest into projects, but also take directional bets. There is a thread from Sam Trabucco, who was the CEO of Alameda at the time, where he was talking about how they discovered that, Doge price goes up when Elon Musk tweets, and then they would long Doge. But, this is what the kids on Reddit are doing. Like, this is not algorithmic trading. Like, this is like the
Wall
joke.
Street bets. Yeah.
Exactly. Like, everyone thought at the time, these guys are like geniuses. But actually, they didn't really have much of a clue, probably, what they were doing. They were like pretty much kids. Now, let's go back to FTT. What's even worse, what they were doing. So at some point in 2020, they launched an order book decentralized exchange called Project Serum on Solana. Solana at the time was a very small ecosystem, had very good tech, was very fast, much easier to build trading technology on, and had a lot of venture capital support. All those like Silicon Valley VCs who felt like they had missed out on Ethereum. Let's do the next best thing. Let's, invest in this like really fast blockchain. That was like the great idea at the time. Sam, his team must have seen this. So they launched Project Serum. Obviously, they launched a token, extremely predatory terms, emphasizing speed over diligence. So basically, the faster you invest, the better price you get and things like that. So they did that. They did a bunch of other projects on the Solana ecosystem. And obviously each with their own coin. I should say token. Those tokens became known as so-called SAM coins, and they were famous for having a very, very high total supply, but a very low float. What does that mean? It means it's really easy to push up the price. So if only 1% of the tokens available supply is actually circulating, you can pump and dump the price. It's very easy for Alameda to manipulate the price. Now, the token gets listed on FTX, nowhere else, because let's be honest, it's a shitcoin. No one has any interest in it, but they're listed on FTX. They can pump it, they can short it, but also they have it on their balance sheet, so they can borrow against it. Now, they'll have a token. Sorry.
In traditional finance terms, is this just because I'm an idiot when it comes to all this, so I want to sympathize with all my idiot audience. Is this like, in TradFi terms, is this just double dealing? Is this a way to understand it? I know it's like sophisticated and digital, but
it's not that sophisticated. It's a good thought, like pump and dump scheme, essentially. Yeah. Like, anyone who was really like well versed in the crypto world stayed well clear of those tokens, because it was very easy to see. Like, let's say you invest in a token, you put 2 million in a token at a 10 million market cap, but now you release 1% of that token, and suddenly it goes up the fully diluted valuation. So if all the tokens, all the full supply was on the market, its valuation would be $1 billion. And suddenly your 2 million become $200 million. It's like, it's games with, with like the denominator, and you basically pump up the value of something. Like, this is the kind of thing that gets, hedge fund managers in prison when they're trying to avoid bankruptcy, and like they manipulate the value of their holdings. That's exactly what these guys were doing. And the thing is, yes, you have a 200 million asset on your balance sheet, but it's not liquid, right? Because there's no market in the world where you will actually be able to sell that asset for 200 million. But you put it down on your balance sheet, and you go to the lenders and you say, hey, here's my balance sheet. We got 30 billion plus of assets on it. can you lend me $1 billion? No problem. Here's $1 billion.
And was there also a bit? Was there like Sam like feeding himself? Is that why he's like the main culprit, the main defendant in this? Or is just this pump and dump?
So in what sense feeding? Feeding himself as in like just stealing money?
Yeah, and this kind of goes into like what was Alameda, but like this kind of, yeah, exactly. Was he feeding himself? Was he taking food from the table of work and like feeding himself with it?
So this is where we enter the realm of speculation. Like we've managed now to speak for half an hour about FTX, but we haven't mentioned effective altruism, which is very, very important in like the whole
Did you say altruism?
saga.
Yeah,
Effective altruism.
Yeah, that's what FBF is all about.
Exactly.
Whoa.
So
I think we might. I know what altruism is, but I don't know what effective altruism is.
So you're holding SBF and altruism both in your head, and you're like, these don't match up together right now. But yeah, that's what he vouched. That's what he was. That was what he was all about, or is maybe, and we don't know. And he's just, has a perverted view of the world. But that's what he marketed himself as for a while.
So he has a philosophy of altruism. Is that correct? As in selflessness.
So effective altruism is a movement that started actually in Oxford and became very popular in the Bay Area. And it's kind of this idea that you have to be hyper efficient and effective in the way you support certain causes. So you must maximize the amount of money you put in like the lowest hanging fruit causes. So things like, can we fight malaria? Can we fight, worms, which prevent kids in Africa going to school and things like that? And it's, obviously started on a really, really good basis. Some of it's an ideology that's quite appealing to like utilitarians and rationalists, because the idea is you have to maximize the money you make. You have to absolutely maximize every effort you make so that you can then support effective altruism. So the question is how. So Sam got into that at uni at MIT when he met the founder of effective altruism, a guy called Whale. I forgot his last name. Will McClaskey, I think, something like that. Sam, after he left Jane Street, he ran for a few months the Center of Effective Altruism, I think in San Francisco or something like that. And he wasn't the only one into it. Like kind of this community of his like friends and early employees and founders, they were all massively into it. Now we can speculate to what extent was this like almost a sect and the ideology that was driving him, or was it just an excuse and it was like a nonsense and he just wanted to enrich himself? It's hard to say. This is why I say this is very speculative at this point. It's clear to say they were at all points, they were donating a lot of money into all sorts of things like this. And you could almost see the equation that was going on in Sam's head. Like this guy didn't care about crypto. Like he didn't care about, permissionless technology and decentralization and private currencies. And like, the things that got a lot of people into crypto, those things meant nothing to him. He saw crypto as a way, hey, this is a really easy way to take risk, but with that risk, make a gigantic amount of money. So you can see how in his head, the formula was, let's make a lot of money with this slightly scammy business, milk it as much as we can, but at the same time, grow it into this gigantic hegemoth that just prints money and we solve all problems of the world. It's like these young kids, they're all like really idealistic. It's kind of, but then imagine, exactly, the market keeps going up.
It only goes up, I hear.
It only goes up. Everyone writes about you, what a genius you are. You're in all the newspapers. You're already from like a good family. We're going to probably talk about this later, but Sam's parents are professors in Stanford. Obviously he's a very privileged kid, went to MIT. It's all working out so nicely. Everything goes up. And you probably stop really distinguishing. Oh, are you guys still there?
Yep.
Yeah. Sorry.
He just had it down.
Yeah. So you start losing this distinction between what is yours, what is the customer's, what's the right thing, what's the wrong thing. So at some point, I mean, they never built like a proper financial institution. They wouldn't even know what good looks like in terms of, setting up the right accounting standards and the right compliance and risk management. And they're based in the Bahamas, right? They're based in the Bahamas because there's less regulatory oversight. So
they said FTX, Alameda?
FTX.
Yeah, FTX is headquartered in Bahamas.
Exactly. And so is Alameda, in fact. So everything becomes like a blur. And in Sam's head, it's like we have this 34 billion of assets. We owe customers 7-8 billion in deposits, but obviously we have so much on the balance sheet. It's all my money anyway. We're gonna make it all back if something goes down, but it doesn't go down anyway. We have access. We can always raise more equity capital because I'm, the superstar. And we can also always go to all those lenders and borrow more money from them. So what could possibly go wrong, right?
Oh man,
that is.
But it's kind of I don't want to make it sound like there wasn't a criminal energy here, right? Because it's kind of, this is where we are in speculation. Like, to what extent? Yeah, sorry, Mike. Go ahead.
No. That's exactly what I was going to say. Was I feel like to some degree there was, you're probably right. You have rock star syndrome, and especially if you have like this meteoric, like just absolutely just day to night, or excuse me, night to day, mushrooming of not just fame but wealth too. And maybe he did exhibit and embody a lot of the altruistic values and everything that you're talking about here. But I mean, to some point, it's, again, speculation. We are tinfoiling here, but at the same time, it's one of those things where stuff like that the fame is one thing, but like when you have that kind of money, like that doesn't go unnoticed, like that doesn't, you don't have billions of dollars and automatically, or billions of whatever value you want to assign. But there seems to be, because there's investors of all sorts. There's hedge funds, there's different funds, I think pensions, you got the cryptoverse, everyone is involved there. And in these, and I feel like these things take, I don't feel they all require contracts. They all require deals, and he's highly connected in a bunch of different people. Like you could see that, there's a lot of, dare I say, shroudness and there's, he had a whole list of political donations, and I'm not going to even go there because that's, its own island. But, I feel like they're, for
is that the same island that what's his name took all those girls to?
Redacted. Redacted. Yeah, no, that's what I'm saying is, like, when you handle that kind of money, and especially with an unregulated sphere like this, you're talking about very possibly talking about money laundering. You're probably talking about a lot of big players who trusted you with something, and now you're quintessentially just effed in the A, and that's all being unraveled right now. Like, but that's what I'm trying to tie it off at is he probably had a vision of what he wanted to do, but then it got perverted by the fact that, like, everything just became so complex, so many moving parts, so many people involved, and now it's in pure and utter damage control. Like it's I mean, shit.
Is it salvageable? You say damage control as in it's not like completely imploded in on itself like the Hindenburg. Is it?
It's the Hindenburg is a child's play compared to that. Really.
Yeah, yeah. Whenever it comes to financial anything, like it's the Hindenburg is. I mean, I don't know how you want to call it. It's just like a case of a blown up balloon. But this is this.
Oh, the humanity.
Yeah, and kind of, I think not even that many people died in the Hindenburg, considering how ridiculous it was. But this is this is ridiculous. Like like the scale of the. I mean, I think this is like 3 times as big as Bernie Madoff's valuation. I think Bernie Madoff ended up in like 12, and this is like 38 or something.
I think that there'll be still for years and years a lot of digging into this to do, because who knows really how many funds are still out there. There was also, just as FTX was going down, there was like a 400 million hack, but no one really knows how or who. And obviously like, speaking of the criminal energy, like these guys built in backdoors for Alameda, right? So there was definitely from the beginning, there was like criminal energy in the way that there was like a brutal ruthlessness. There was this joke, like in the days before it was unimaginable that FTX and Alameda would implode. They were like the Death Star. I already had like they were already starting to become unpopular in the industry, particularly because of their regulatory initiatives, and they were trying to kind of push down DeFi regulation onto the market that would benefit them, which I'm sure we'll touch on later. But these guys, they seemed so invincible, like they knew what they were doing. During the whole like bull market, there was this whole yield farming boom, and the joke was you can't find a pool that Alameda wasn't already farming. And there was this project that launched where you collect tokens for walking. I think it was called Steppen. So the joke was Alameda is hiring the Jamaican Olympic runner team to farm it. So everyone thought these guys are like the smartest kids. But actually, what they were doing was losing a lot of money, while still making money through like some of the backdoors they had built into FTX. So like having faster access to the APIs, taking advantage of if there was a massive liquidation week and the price would jump one way, but then kind of return to the mean, so the average price across all the exchanges, they would take advantage of that, and they would have faster access to that, take positions against their customers, and so on and so on. So there was from the start a ruthlessness where obviously they didn't care about what is right and what is wrong, as long as they can print money. It's just they didn't believe that that would ever be a problem.
Oh man,
As old as time.
yeah, it's I guess what can go wrong is an understatement. Yeah, it's
so Mike, do you think this is actually finish that thought, and then I think we'll talk about CZ a little bit, right?
Yeah. No, yeah. You were about to go into Oleg, you were about to go into the back door for I think it was built in Alameda to backstop. I believe it was a sort of run, or a sort of like a wipeout to prevent that. And there was news that came out recently of God, I don't want to sound ignorant, but I think his name was Siga Nishad, who was the person who was one of the lead engineers. I think
he's one of the stool pigeons.
Yeah, one of the guys who I guess is the lead engineer, the one responsible for that. And then there's okay, speculation here. So the taste of tinfoil here on too is like there's also Brett Harrison. And Brett Harrison, it's a very, very strange character here, because this is a person who was the president of FTX 2 months prior to that, to the collapse. He kind of just, Homer Simpson himself into the bushes. And then you have, you look into him and you're like, okay, this guy used to be the lead engineer or the lead tech engineer for Citadel, which happens to be one of the biggest, if not the biggest, market maker in the entire world, in the US, and who has their hands in everything, in absolutely everything. And you're like, okay, that's kind of weird. And he came on, I think it was like a year and a half ago. I think that's when he started. And you're like, okay, well, if this guy who was, the lead engineer for, one of the biggest, if not the biggest market maker on the planet, came on here, and then all of a sudden he like dipped out 2 months prior to the collapse. Like, there's basically nothing on him. Like there's, he just just started coming out, like he tweeted about something about a month ago, saying like, oh, I can't believe my former employer, yada yada yada, woe is this entire situation. But then now he's getting investigated, and all this stuff that was, and this is nowhere near in the outline, but we decided to talk about this. But he came out, and he's now, I guess, talking to authorities, and this is just to give an idea to our viewers, like how the magnitude of what this is like. There's so many things involved, and there's still so much speculation because there's still so much to unravel. It really is like, it really is something that I feel like it's hard to downplay. It really is, because there's, because it just has all the facets of an amazing story. You have what, is SBF really a good guy? Is he actually a criminal mastermind, or is he a fall guy? Or, and then what about all these other things? Like, why is it that why is he in the Bahamas? Why is there a hedge fund, that is being used in all these, why are there so many political donations? Why is there, it's so much. It really is.
You're getting really tinfoil hatty with like the what?
I mean,
but the yarn.
But dude, and I mean, yeah, I can understand that. Like, don't get me wrong. Like, it's so.
It's important to dissect each thing independently instead of like throwing your mind and your eyes at like, because then that's the moment when you get like you become this kind of tinfoil hat instead of like looking at each thing. And I think that's what we're trying to do here: look at each thing and analyze it, and then put it in context, as opposed to like speculate on the grander nefariousness of crypto and life itself.
Yeah, I mean, like, the answer to a lot of those questions is it's somewhere in between. But like, with someone like Brad Harrison, obviously, like, he must have seen, these guys are rubbish at being a market maker. They're not a good market maker. The only place where they're making money is FTX, because the game is rigged for them. Like, so actually, but by the time when the summer came, after the whole blow up of Luna and Three Arrow Capital, and basically all those lenders like BlockFi, Celsius, etc., being de facto bankrupt, clearly that was the moment when things broke at Alameda. And that was the moment when, because Alameda was a counterparty with all those trading desks, and that was the moment when at FTX they decided, okay, we can let Alameda fall, but if Alameda falls, they hold a lot of FTT, and we need them. And if they fall, we fall. So they decided to bail out Alameda with customer funds, and basically kept the whole mess going. That's when Sam Trabucco, the co-CEO of Alameda, he left in August last year, which obviously should have rung all sorts of alarm bells. And people like Brad Harrison, like they were probably keeping some of the grown-ups outside of like the main rooms, because they knew that it wouldn't go well for them. But like, these guys are not idiots. Like, they must have at least gotten a clue of what's going on there.
Yeah. So we're in this point right now in our kind of narrative where FTX is riding high, and if memory serves from my research, and Oleg, please correct me, I think they peaked at 32 billion, right? And then suddenly a tweet came, right? Arguably, it all came down with a bit of a tweet from the Binance co-founder.
So it started with someone leaking the balance sheet of Alameda to CoinDesk. That's what gave it kind of the starting push. And on the balance sheet, it looked like actually the holdings of these guys are mostly FTT and completely liquid shitcoins. So the whole thing is a house of cards. At that point, Binance was still holding about $400-500 million worth of FTT, which is a funny thing, right? It's kind of, imagine you give your competitor holds the gun with which he can shoot you. Now, if you are an exchange like FTX, buying $400-500 million worth of your own token back from a competitor shouldn't be a major market operation. Now, CZ tweeted, obviously made that famous tweet that they'll be selling that position. But there was a bit of a history between the two of them. So already, I think it was September, I got this notice, or September 2019, when CZ quote out on Twitter that a smaller derivative exchange competitor was trying to attack Binance futures and manipulate the price. And everyone at the time kind of knew it had been probably Alameda. So they were trying to run some arbitrage between FTX and Binance futures, which obviously CZ took pretty badly. I think that was the beginning of the breakdown of the relationship, because CZ must have thought that, hey, we are their first investor. We are the guys who made them. But obviously, as we already found out, this, like Sam and his crew, they don't really care. They see an opportunity to make money, and risk is not a calculation for them, and they go for it.
Okay.
And then earlier in 2020, so like mid-summer, things were starting to heat up. So obviously, the market was crashing. Luna, 3 Arrow Capital, etc., had failed. Alameda and FTX knew that they're in a deep hole. They start to get more and more involved in the regulatory process, trying to push through this Digital Commodities Consumer Protection Act in the US, which would have given them a really privileged status, but really disadvantaged DeFi. And a lot of people in the industry start pushing back against Sam. Now, Sam is really starting to lose it. Like, he's starting to say incoherent things, stupid stuff. He's on podcasts, playing League of Legends, all this like insanely stupid things. And he takes a swing at CZ. So he tweets something like, oh, hey guys, maybe you should have someone like ZZ come represent you in Washington instead of me. Oh, is he even allowed to go to Washington these days? Something like that, like really cheeky.
Jesus Christ.
But so it was, and this is like October. This is just before things really collapsed. And the saying, if you take a hit at the king, you better not miss. Now,
if you want to shoot the king, you better kill the king.
Right.
You better kill the king. Now, Sam missed by 1.5 miles, and CZ went in for the kill. I don't think Binance at the time was aware how bad the situation is at FTX. Now, he made the tweet. Now, this kind of operations happen, right? So what would be the normal process that a professional actor does? Through a back channel, you contact CZ and you say, hey guys, we offer you X amount OTC over the counter to buy off the 500 million of FTT, so you don't crash the price, which would just kill the market. It's probably better for Binance because there isn't enough liquidity, so they wouldn't be able to get a good enough price for it anyway. So you do that deal, trade OTC. Now, what happens? Was it stupidity? Was it inexperience? Was it panic? Either one of those. Maybe they didn't have a back channel. But Caroline, the CEO of Alameda, tweets, hey guys, no worries, to CZ, we are willing to buy all your FTT at $22 per token. Sounds reasonable, right? But it's the stupidest thing you can do. Because the way this works is you tell the market exactly below which price you can't have your token fall. Basically, right? So you're giving the market a clear sign that if the price goes below 22, you're in some sort of trouble. So the bank run
also wasn't Caroline his SBF Sam's girlfriend and roommate?
They were all
risk of being salacious.
It was a lot. There's it was like a harem.
I imagine a dorm room where this is all kind of like happening.
So I don't want to go into like the let's say the nasty tabloid type of rumors, but they were.
That's why we're here.
But they were all roommates. It was like a college fraternity house. They were all like at least 10 of them, like the FTX leadership team. They were living together in this like villa in the Bahamas, and they were just like working and doing drugs and doing stupid stuff. And it sounds like
they all fucking. Yeah. That's literally what came out. Like they were all fucking, and it was like really weird because even Caroline came out and was like, yeah, but there was like a hierarchy or whatever. I don't know if that's speculation or not, but man, like it was yeah, it was weird. They were definitely partying hard, probably partying harder than they were working, which is insane to think about. But yeah.
I'm not actually sure on that. I think they were a bunch of nerds. They were doing a lot of like performance enhancing drugs. I'm not sure it was all as exciting as it sounds in like the New York Post, you know. They
For a bunch of
probably were
Austin
wasting.
kids from like Silicon Valley, I'm sure it was very exciting.
They were probably playing more computer games than they were doing any of the fun stuff, to be honest.
So then CZ or CZ tweets, he bombs the shop with a single tweet. Is that I think it was kind of like I'm dumping all my FTT. Is that?
I think it's harsh on CZ to put it that way, because CZ didn't have a reason to hold those tokens. They weren't invested on the equity side of FTX anymore. There wasn't a reason for them to hold those tokens. And when that balance sheet leaked, it was the right thing for them to do to kind of de-risk their position. And in a way, the way this market operates, if Binance had started to just sell those FTT tokens without telling anyone, you could see that in 2 seconds on chain anyway, right? So there wouldn't have been a clean way to do that. So by him going out and tweeting it, he kind of thought probably he's being fully transparent. It's kind of like FTX was dead 99%, and like CZ maybe gave a 0.1% push, to the extent he wasn't even fully aware of the fact that it would totally kill FTX. Having said that, who knows what's going on really behind the back.
But he did represent Binance in that action, right?
Right. Yeah, absolutely. I thought he did. Yeah. Okay.
Absolutely.
Yeah.
And I mean, Binance, obviously, like Binance made a loss on this, right? Because at the end of the day, as FTX failed, Binance pretty much got stuck on $400 million worth of FTT.
Right. I didn't know that. You corrected me on that on the outline. I was like, oh, I thought they totally just dumped their coin, and that's what happened.
No, there was nowhere near the market for that. So they got stuck on most of that. But like Binance is Binance. Like if you're printing money, if you've been as an exchange printing as much money as these guys, 400 million should not be a huge amount for you. Like that's the irony with FTX. Like imagine you're running the casino and it's a bull market, and you're not winning in 51% of the cases, you're winning in 100% of the cases, because you have your own market maker running the show with privileged access. You're getting paid fees on every transaction, and like you're the sexy kid on the block, and everyone wants to come to you. Like you're printing money. How can you fuck it up that bad? And they still managed. That's the irony here.
Okay. Oh man. All right. Yeah. Oh man. All right. Continue forward.
Yeah. So why was Sam Bankman-Fried involved in regulatory talks with Congress? Can you illuminate us on that a little bit?
That's a good question.
Was it just to defend his own position?
So there is the obvious answer, which is that he wanted to strengthen centralized exchanges versus decentralized because he needed more customer assets. Probably their thinking was the following. Their thinking was, okay, we're in trouble, but they didn't think, okay, in November we are dead. They thought we have years to plug this hole. We have a long time to fix this. Like shit will not hit the fan. We've got our 30 billion balance sheet, whatever. Plus, we can always go to the VCs and raise more money. So they probably didn't think that they are as much in trouble as they are, but they knew they are in trouble. So now, what do? Let's do some good old school regulatory capture. Now, our friendly next door Democrat donor SBF had been like his parents, his family have actually been Democrat donors for a long time. And this is, by the way, like, I'm totally non-political about this. Like, I don't care, Democrats, Republicans. The US are crazy anyway, whichever side you put that on, right? But so Sam was donating a lot of money to various Democrat candidates. I remember reading somewhere he was like the second largest donor to the Democrats. Yeah, this is a great picture with with one guy who clearly knows how to dress in good company.
I'm glad you brought it up and not me, because when I see this, I'm like, I know he's trying to exemplify the Silicon Valley like hoodie, but like this is pajamas. This is pajamas and like New Balances. Like, come on.
Yeah, it's not even a hoodie, right?
Yeah.
So he's giving a lot of money to causes. Now, he's seen like this is the case where everyone loves Sam. He's like Ivy League, smart kid, parents who are one of us. They're part of like the kind of the elite circle. What's Wunderkind. What's less often discussed. So that wasn't just Sam, right? Caroline's father was the head of the economics department at MIT. Now, guess what? Gary Gensler, the head of the SEC, was an economics professor at MIT before he became a regulator.
Also a mentor, I guess, right?
Yeah, whichever. But in the least, we can say that they would have known each other relatively well. So obviously, there's a huge amount of trust. He's one of us. So there's this dodgy crypto market, all these weird people, lots of, dodgy exchanges, dodgy characters. We don't like them. We don't trust them. But we got Sam. Sam can explain this to us. Sam is one of us. Sam speaks our language. Sam sounds smart. The funny thing is, like, you read a lot of the things he said. Sam proudly said that he didn't read books. Like, Sam used to say to journalists that he didn't think that a book would need to be more than like a 6-paragraph article. Like, and at that time that sounded like, wow, he's so smart, he doesn't read books. But like, hang on, maybe that doesn't make much sense. You know what I mean? So everything looked really smart when he was saying it at the time and everyone was listening to him. Actually, if you dig into a lot of it, it was complete nonsense. But let's just say that politicians who deal with 100 different topics maybe are more easy to influence with someone who sounds smart, looks like them, speaks their language, etc.
It's also funny how someone sounds really smart when they're making lots of money, but when they're already kind of in the garbage pail, it's just like, oh, that guy was. Did you hear what he was saying? Like, yeah, dude.
Yeah.
I mean, you heard it last month, and it was different.
Exactly. And like, look, I'm not gonna say like I was that smart and noticed that beforehand. If you had asked me 4 months ago, I would have said these guys are like giga brains and they're printing money. That's like, did I follow Sam closely? No, to be honest, no. Was I like studying everything he was saying? No. But then I wasn't Sequoia and invested 200 million in his company, right? So I didn't have a good reason to do that.
Yeah, I guess the involvement, the government and the Democratic Party, and not involvement, but the donations, those start to make the water a little bit murky, right? Or I guess, I mean, every act is political these days, but like makes me put on Michael's tin hat. It's like, all right, let me just put some yarn on the bulletin board. And
it's a crown.
I think
I'm gonna make you one.
It's probably the way like policy is done and regulations are written anyway normally. But like, so SBF was the crypto person that Gary Gensler, the head of the SEC, met the most often. But then people forget the SEC had audited Bernie Madoff twice. And he got away with it. Like, so, maybe there's something here about the deeper process. The truth is that usually these kind of problems get addressed retrospectively. Like, it's extremely rare that regulators or God forbid, politicians solve a problem beforehand. It's usually something blows up and then rules come in to address that, but then something else blows up next time. That's just the way that the world works.
Yeah, that kind of that tracks with at least experience so far.
Yeah. And I really like, there are people in the industry who are like, oh, this is so a big conspiracy, and they set this up to drag crypto down, and now Sam will be giving evidence against everyone in crypto, and he will indict CZ and Binance and all the people that US regulators and government want to get down anyway, and like, it's so an elaborate thing. Now, it sounds too good to be true. Like, I don't believe this kind of conspiracies. It requires way too much planning and thinking by people who have rarely proven to have that level of advanced planning. I just think it's a combination of incompetence and chaos. And
Are you talking about governments and whatever it is you're saying?
Yeah, exactly.
Yeah.
Between governments,
they don't really think further than 5 or 10 years. So
They think to the next election, and I mean that's fine. That's how the way the system is set up to be, right? Like they're not, you maybe the Chinese government thinks 5-10 years down the line, but then you have all sorts of other problems with that system, right? Like it's not perfect.
Do you anticipate that SBF, Sam Bankman-Fried, is going to be treated with like a feather? Is he going to be hit with a feather stick when it comes down to penalties, given his involvement?
So if I had to make a complete bet on what will happen, and I don't have the slightest clue, but if I had to make a bet, he'll get sentenced to a long sentence, like 20 years plus at least. But that sentence at one point will be commuted by a Democrat president. That would be my guess. He'll strike some kind of plea deal where he'll avoid like a life sentence in return for ratting on like different actors within the crypto world. He'll get, instead of like life, he'll get, let's say, 20 years, and then after 10 years it will be commuted by some of them.
So stay tuned in 2050 when Malia Obama exonerates Sam Bankman-Fried for his crimes
and his donations, or his family's donations to all sorts of the right causes.
Yeah.
Okay. All right. That's probably a good guess, but I think he's probably pretty spot on, considering the squealers do get less everything. So, Mike,
do you, from all the Reddit rabbit holing you've been doing, is your take on this that, well, he's the prime, he's head at the top of the kind of org chart when it comes to kind of penalization in this, right? Is that
I think the community has, I mean, depending on whatever sub you go on, but everyone has, it's kind of like each one is its own different world. But I think that there is some nuance to a lot of people thinking that I think what it is that it's probably just a lot of nerd hating on nerd kind of deal where everyone is like, this guy is not a criminal mastermind. Like, look at this dweeb. Like, that's usually what the consensus is. And then there's it's like Oleg said, like, it's everything is in between. It's typically like, it's probably some of that. It's probably, at some point you see yourself, you lived long enough to become the villain yourself, and maybe he was the top of the heap there. But to say that he did it alone, or that there's no one else that's culpable or anything else like that is I think is naive. Like there's a lot of moving parts. There's this isn't a one-man operation. Like, you can obviously tell. Like, it's just...
No, but he will be the one, if everyone sings, he will be the one to take the fall, right? Assuming.
I mean, yeah, but it's to be determined on this next episode of Dragon Ball Z. Like, you really don't know. You really don't know.
I'm sure some of the others will also get sentences, but probably very short ones, like Caroline, Gary Wang, who was also FTX co-founder, probably Sam Trabucco. I would hate to see Sam Trabucco get away with it, but I don't think he will.
And so, and also Brett. I think Brett Harrison has a lot larger of a role to play here than anyone wants to say, because he definitely has. Granted, he works for used to work for an official market maker or whatever. He has like some sort of validity, but even at least in my opinion, I don't know if anyone else wants to. A lot of these big time. There's a lot of nefarious stuff going on in like large organizations like that. You're able to obscure a lot of stuff, and if you're able to scale it to that degree, I feel like you could definitely transpose those kinds of skills to something that is not necessarily as regulated, and it's more digital, which means it's more liquid, not just in the financial way, but also in the in the blockchain way, I guess you would want to call it. I don't know. But there's, it's tough. Like like Oleg said, this is definitely going to be probably like a 5 to 10 year, untangling of an electrical cord. it's going to be bad.
Yeah,
Yeah,
sure.
yeah.
Yeah, and so I mean, SBF and FTX isn't the only organization or person going down, right? I read last night that a gentleman, Abraham Eisenberg, just got arrested this Christmas season in Puerto Rico, where Michael is actually calling in from, for market manipulation of Mango, right? Like, so like, I think
I just
maybe
read about that. That's right. That's right. I
yeah,
totally forgot about that.
kind of leading up to, I want to be mindful of Oleg's time, like leading up to kind of the end of this. I think there's the conversation of, okay, obviously we're seeing that regulation is going to be playing a big part in all this, and each country is probably each country and their respective financial systems are going to have different ones, like the U.S. versus the UK. I read that Rishi Sunak just is like, hey guys, the UK is here, like we want to be we want to be headstrong in the kind of crypto market. So like, what's the way forward? Give us a little bit of optimism, Oleg. Like, how can we, give us some sunshine?
Give us some sunshine. Wow, that's a hard question, right? I mean, I'm trying to kind of narrow this down a little bit. If we want to go down more the regulatory route or the market route, like one word about Avi Eisen, who got arrested. Like this part, it's actually quite an interesting case, because it was an economic exploit, in the sense he saw a weakness in, let's say, the economic setup of the protocol, and he managed to overwhelm the pool, borrow more than he should have been able to. It wasn't even like an actual hack they exploited. So there's this mantra that, and he was really open about having done it on Twitter, right? That was the joke. He was like, hey, I didn't do anything wrong. I didn't hack anything. Just the thing was poorly set up. So it's kind of this ethos that code is law. So if something was set up in a certain way, even if you exploit it, that doesn't make it illegal, because that's just how it was written. Now, that's not going to stand up in courts, right? Code is law is something that like nerds on Reddit might dream of, but the reality is like no real world court will anytime soon stand up for that. So what sunshine can we expect? I mean, the best thing, like, let's focus a bit on the regulatory side. The best thing we could, in my opinion, hope for is that centralized platforms, centralized exchanges and lenders get regulated the same way as, financial institutions, because it makes sense. They hold customer funds, they do financial operations, they deal both with crypto, but also with the traditional world. But worst of all, there's transparency. Like, if you are a DeFi protocol, everyone can see on the blockchain exactly what's happening. You can't do that with FTX. You can't do that with any of the centralized exchanges. So it makes perfect sense to regulate them. Now, with things like DeFi, this technology is so new and so young. The right way to deal with that would be some kind of, few people remember, but in the 90s, there was a safe harbor rule for the internet to just allow innovation to emerge. And we should be doing the same in crypto and DeFi. There should be some kind of safe harbor rule that allows projects, allows protocols to experiment with tokens, experiment with token economics, try out different structures. And obviously, if someone scams, if someone promotes something as a get-rich-quick scheme, those people should be prosecuted. But the sad thing is that very often that doesn't happen. Like, everyone in the industry knows who are some of the main bad players. And those people are not being prosecuted for all sorts of reasons. But partially because they're not based in a country that bothers with that. And it would be hard to get them for like US authorities. And it would be hard to prove because they would need to, I don't know, understand some particular aspect of something that maybe there isn't anyone who wants to deal with that, etc. So you have protocols that do rug pulls, which is basically, scam the users, and they get away with that. Now, those people should be prosecuted. But anyone, all the kind of genuine, legitimate players who want to experiment and try out what we could do with this technology, those guys should be protected. And if I want to give sunshine, I hope that there are enough smart regulators out there in the world who understand that the possible advantages of, creating a system that is 100x cleaner, more transparent, faster, easier to use, and cheaper than the traditional finance system will be a gigantic advantage for the whole world. And if we just block it with extremely arduous regulation, we will prevent that from emerging in the near term, and we shouldn't do that.
Okay. Yeah.
Do you think that to some degree, I think the answer is obviously yes, but do you think that we can't just throw the book of TradFi regulation at DeFi, or rather at cryptocurrency markets, and expect? Because I mean, we have Bernie Madoffs in TradFi. Like, how are we not, like, we obviously don't know how to regulate traditional finance markets absolutely to the nth degree. But I guess my question is, are we trying to use a TradFi tool on a digital exchange and expecting to be successful as far as regulation is concerned?
Yeah, that's a really, really good question, really good point. And one thing with Bernie Madoff, now Bernie Madoff was a proper criminal operation, same way as FTX in the end. What I'm more concerned with is Lehman Brothers and tons of other banks selling packaged, mortgage-backed securities insured through credit default swaps, AAA rated, to pension funds and local authorities and savings banks, and basically totally misadvertising the risk of those products. And no one really got prosecuted for that. What's even worse is the only player who actually was allowed to fail was Lehman Brothers, but the majority of the market doing that got away with that. So absolutely terrible precedent was set yet again, because we have a history of bailing out the too big to fail, etc., etc. So the financial markets today, how they run, we could have another 2-hour episode just talking about that, but like are messed up in a lot of different ways. Now let's hypothetically assume that we want to come up with a better system. Like, if we acknowledge there is an issue here, we want to come up with a better system. Now, the last thing we should do is take regulation that is 60 years old and made even pre-internet days. I'm not even talking about crypto, and just just try to put it onto crypto. Now, they're trying to apply the whole, securities law. Oh, this token fails the Howey test, so it should be a security. Now, who cares actually? What does it actually mean? It's a yes. It looks in a lot of ways like a security, sure. And we should. I'm not saying we shouldn't regulate it, right? But what I'm saying is it's a completely different technology that enables so much more innovation, so much faster speed of innovation. So why would you want to apply to it something that is incredibly painful, unnecessary painful? Like, it's bad regulation already in the traditional finance world, and now we're going to put it on something that could actually help fix that. And the final point is that we have something in the crypto and blockchain, bless you, in crypto and blockchain that is not available in the traditional finance world, which should be the best thing that ever happened to regulators. We have chain analytics. We can track transactions. Like, the best things. Yeah, sorry, jump in.
No, that's what I was going to say to you, is like, I feel like the one core kernel that you're talking about how our markets are run now, and like how it's just transparency. Like, that's really anyone has ever wanted, because since you have transparency, then everything else falls in line for anything that you would want to call regulatory, because regulatory basically is just another way of saying, like, make sure you're not doing sketchy stuff. And it's like, well, if everyone can see what you're doing, then there's no need for sketchy stuff, because you're not going to be tempted to be doing sketchy shit. Like, it's just there. Like that's the whole point. And yeah, continue, Oleg. I'm sorry.
The analogy I like, no, it's a very good point. The analogy I like to use is, the Tour de France, the cycling race. So even the problem there was everyone was using doping, but what they do is they save the blood tests of the athletes, and even if today they freeze it. So even if today they don't have the technology to detect the newest doping that is used by the athletes, they know that in 5 years, 10 years, there will be new technologies available to detect it. So they prosecute them retrospectively. It's the same. The blockchain does not forget. So even
it's
if
another
today,
pump and dump scheme, really.
Exactly.
Re-injecting
Exactly.
oxygenated blood.
Literally. Like if today you use some mixers to mask your transactions, etc., no one can say that tomorrow there won't be some chain analysis, like that's the biggest player in the chain analytics space, won't come up or with some smart way to still catch you. And the blockchain does not forget. So for me, I feel much more comfortable putting my money into a crypto blockchain secure system where I actually have full visibility and ownership over the funds than if I put them into a bank and I don't have a clue what is happening with the bank. What are they doing with my money? Yes, I know the funds are secured up to 100K with the deposit insurance, but even that only holds up to a certain point, and so on and so on and so on. There are actually so many doubts if you start to really think about that. And that's in the Western world where we are lucky not to have to worry too much about these things. What about if you're in a developing country? What about if there's another financial crisis? And so on and so on. So already today, we have the tools to actually build, as I said, 100x better financial system. We just need to make sure that the regulations we apply to it, we actually take the time to think them through, see how the sector evolves, prosecute the frauds, and then come up with mindful, intelligent regulation that actually addresses this new world rather than, pretend that it's the same old.
Yeah, that's a great synthesis of it. One thing I kind of wrote down for myself last night and like woke up thinking about this is it overly optimistic to think that crypto markets can offer? Okay, so we're seeing this kind of Mike might call it plummeting, or this kind of deflation of traditional market and like the rise of interest rates and all this kind of tumult in traditional markets. Is it overly optimistic to think that digital markets can kind of offer like a mitigating aspect to traditional markets, or is it easier to anticipate that digital markets will respond in kind with traditional?
So what we've seen so far, and obviously I can't predict the future, but we'll talk about that in a second. But so far, crypto has behaved in line with traditional markets as a risk-on asset. So like if your tech stocks drop, 50%, crypto drops 75%. So it's like even more high risk than tech. And if you think about it, that makes perfect sense because there isn't anything in the price of the asset programmed into it that will make it behave differently. The question is, who are the people who invest? It's the same people that we have an asset bubble. There's lots of money that suddenly from stimulus checks to central bank low interest rates and so on drives asset bubbles. All asset prices are going up in a massive heap of speculation. So does crypto. And when rates start to go up, the whole thing deflates, everything crashes. So does crypto. Now, for it to start to behave differently, there'll be a lot of things that will need to evolve. So first of all, the market needs to become much more mature. We are starting to see more and more use cases emerge, but it's not linear. Like it took, I remember reading the first article arguing that artificial intelligence is overrated was written in the 1970s. Like technology takes a really long time to prosper and to mature. And crypto is very young technology. It feels like, oh, this shit has been around for 14 years. Why hasn't it done anything exciting yet? And A, already it has done a lot of exciting stuff. But B, 14 years is nothing for a technology like this. So we need to really wait and see how it plays out. Most importantly, we need to have enough liquidity. So the market needs to, like, the ties of DeFi are being built, one, protocol, one integration at a time. All of this supports liquidity. With liquidity, more trading can emerge. As more trading emerges, as more use cases emerges, more fundamentals emerge. So you can start saying, actually, this token, it makes sense maybe to invest it because of the tokenomics of it and the use cases of the token. So now I should invest in it.
Tokenomics, I love that.
Exactly. And then suddenly the day will come where we can start talking more about it behaves independently from other assets. It's completely its own asset rather than just a risk on asset. There is, last thing on that, there's already some evidence that Bitcoin is starting to detach from some of that. I mean, already today, Bitcoin to an extent is a macro asset. Bitcoin is on the balance sheet of a small number of countries, but even to say it's on the balance sheet of a small number of countries is mind-blowing to someone 5 years ago, and so on. So already today, Bitcoin is starting to behave slightly differently. But
yeah, I read that
Bitcoin
Bitcoin and Ether have almost not pulled back, but they've dropped in, and smaller cryptos are kind of like gaining or rallying, and even FTT is rallying, or at least on Monday it was like.
Yeah, I mean, those are like most likely what would be called a mini echo bubble, or a bear market rally. When the market is still weak, there'll be nothing goes down 100% of the time or up 100% of the time. Even in a bull market, there'll be a retrace. Even in a bear market, there'll be a pump basically. So I wouldn't put too much money on that.
Oleg, thank you so much for coming and joining us and shedding a little bit of light on this. I guess, as Michael says, this is kind of a developing story. I think we're going to see, I've already seen courtroom sketches of SBF. So, hopefully it's not just all tabloid stuff, although that's why I'm here. I'm here for the tabloid stuff. But it's good to kind of get a better understanding of FTX versus Alameda versus FTT versus, it's all a,
especially for someone who knows what they're talking about, because again, this is what we're here for. We're just here to bring on people to make us smarter.
Thanks so much for having me, guys.
Yeah, what do you last bit? What are you looking forward to, crypto wise or Web3 wise in 2023? I know your crystal ball is in the shop, so
I'm looking forward to people just calmly building through the bear market. So instead of the drama and like more projects blowing up, which we still have a few Damocles swords hanging over our heads, there is the whole, Genesis, which is like an old big OTC desk, which I mentioned previously briefly. There are a couple of exchanges which are still under fire. There's always Tether, USDT, the stable coin, which is always like a big black swan risk in crypto. So those things are hanging over us. I hope they either blow up soon or they don't blow up, just so we can forget about this. And I hope that like my team, my company CoinRule, like we keep building, and we hope that so does everyone else. There are some good narratives, like Ethereum has migrated to proof of stake from proof of work, and they will now allow, I think in 1 or 2 months' time, the so-called Shanghai update, they will allow stakers to start withdrawing their funds, which will really enable like a much more, much more vibrant Ethereum staking ecosystem. There'll be a lot of interesting things emerge around that. There's already a lot of stuff moving and in progress. So kind of just building, no drama, get through 2023 without major disasters. That would be a good start.
So HODL, HODL. Hold on for dear life.
Hold on for dear life.
Thanks so much, Oleg. Talk to you soon.
Thanks so much, guys. Talk to you soon.
Right,
Bye-bye.
Have a good one.
Bye.
Mike, who are we looking forward to as a possible episode 3, hopefully 4 or 5? What are you excited about?
So I've been looking into a few people that I really wanted to bring on here. I don't want to say names because I have contacted them already, and
let's go nameless for now. You can just give their description or a little bit of the CV.
Right. So hopefully if this guy gets back to me, hopefully we'll have someone that's ex SEC on here. The thing though is that if we're going to continue on the FTX train, we could probably get someone. The reason I want someone regulatory on here is because I think they would be more in tune with whatever it is that the next steps are in something like this big case, because this is a big case. Like this is again, like to downplay this would be naive. Aside from him, I would like to get some either an analyst who I also am trying to get in contact with. She's very, very smart and very, very in tune with not just investing and macro, but she's more in tune with macro than she is with Web3. But I'd love to get her perspective on the Web3 space and I guess cryptocurrencies. Even though realistically, I don't think this is a Web3 show, and I gotta admit, Oleg was awesome. Like he was so just in tune with everything. Like when I read that article on Medium, I was like, oh, this guy is what's up. Like this is what's up. And I'm kind of impressed that you can call him your friend, because shit.
Yeah. You said a former SEC person sounds really exciting, and an analyst I think would be a great addition to our roster of guests, just to kind of again illuminate a lot of this stuff. But
if I still think personally, I still believe that if it's not those two, I mean Web3 game, and then we spoke about this in our own conversation. Like the Web3 game is exciting. I feel like it's one of these things where we probably should be focusing in on this, like as you could see how exciting a space it is. Like we are, and what better a time to be covering this material than the ashes of a bear market, where this is more than likely going to continue. Like I said, you build on top of rubble, like it's
the ashes of late stage capitalism.
Yeah. And dare I say, like this is more than likely going to be the separation of money and state. Like it's, like if you don't have government control over your money, you now have separation of money and state. And that's what cryptos are. And like he said right at the end there, he was talking about regulating something that you can't regulate in the same scope that we've been regulating since the dawn of, I guess, our old traditional money. Like this is not the same. This is just not the same deal. Like it really isn't. You can't apply the same old rules to these new, right. I don't want to say new tricks, but it's just it's a paradigm shift. It really is. Like, there's a completely, and you can really tell how much of a paradigm shift this is when you started talking about, okay, like I'm in Nigeria and I want to trade Tesla stocks. Well, that's the bridge that people have to start understanding if they want to really understand what the utility is of just the crypto space and different ways that you can tokenize stocks. Is that person would have had to go to go to his country. Does he have to fill out if he's an American citizen? Can he trade on the NYSE? There's just so much regulatory, wall. There's no access for that person to do that. And, with crypto, that is much more feasible. That is so much more feasible. That is actually a within grasp goal if someone like that wanted to do that. And like we spoke about in that intro, until this episode, I don't know if you're going to use it or not, but it's the same thing with people that live in countries that don't have the fortunateness of being a reserve currency or euro or anything like that. They are all subject to fluctuations in their currency that are massive. And, you know, a lot of people in developed countries probably are thinking like, oh yeah, like what's the point of cryptocurrency if you have money? We already have money. And it's just like, well, what about people in Argentina or Venezuela or anywhere else that you are, and they're already doing that.
Whose economies are failing.
Whose economies are failing. Their currency is absolute dog shit. Like, I hate to say it, I don't want to curse, but it's true. Like, there's just there's money on the streets, littered on the streets, because it's worthless. And so what do? Well, they have a phone, they have access to the internet, and they have access to crypto exchanges, and they're using Bitcoin. Like, because, you know, at some point you got to say, all right, well, if the government is going to fail us in this manner, then we're going to take matters in our own hand. And like, that's where the money and empowerment comes from, is like, what do you do? What do you do at this point? It's like, that's what you do. You have to, quite literally, if it's not going to be taken, you know, peacefully, it's going to be taken either by necessity, by force, or necessity. Like, that's just how it works. So,
all right, well, to all our viewers, who might be petrified or optimistic, stay tuned, and we'll keep unpacking all this.
Yeah.
Till next time.